All right, welcome back, everybody. This is Kyle sitting in for Joel L. Conan here. Up for our first guest here is Anne-Marie Bain, author and financial analyst. One of my favorite books, The Trading Book Course, A Practical Guide to Profiting with Technical Analysis. Good morning, Anne-Marie.
How are you? Thanks so much for having me on.
We're doing really well. Taking a look at the markets right here. I pulled up the ES, but what are you seeing in the markets going on right now?
Well, the pullback into the 50 simple moving average on Friday was very much anticipated. And so is this sharp bounce because that's a pretty heavy duty support level, particularly if we're looking at the ES. Now, the problem is, last time we were on, we talked about this a little bit. There is a lot of negative momentum showing up on the daily chart, and it's been there since October. And so when a chart has negative momentum for months, literally, before it begins to drift, it normally does take a pretty solid pullback into a region of support. Now, the trick here is to figure out if the buyers are going to overwhelm the sellers that are now sitting at about maybe 2010 to 2011 50 in the futures. If they do that and they get sold off a little bit, we're going to look for a higher low. Here's the dynamic. A lot of people see the breakout. They keep buying because they don't want to get left out. And then all of a sudden the chart begins to collapse into support. So they become trapped. And when there are a lot of buyers that are trapped, we see these bounces where sellers are taking their profit and buyers immediately try to cover some of their losses, so it shoves the price right back down. So if we look at a daily chart on the ES, we're going to see that December the 11th is one of those sellers taking their profits and buyers trying to get out of a bad trade, and a continuation on that Friday, the 12th, this morning showing that same bounce as they try to capture a little profit and at the same time get themselves into a space where more trapped buyers are saying, hey, listen, I've just got to get out to minimize some of my losses. Momentum stays negative. It is staying negative. It is drifting. But this bounce action is really something that I'm watching through. So overall, the chart's in a pretty big decision zone in the short term. And what it's got to do is stabilize either above the 50, so it can recapture some of its losses, or stabilize below the 50, where we can trace it back into about 1945-ish. That's probably the next level of real support that the chart has.
So if it takes out those lows that we made, would you be looking at this from the short side then, down to that 1945?
Yes. And here's my thing. I don't like taking shorts at the loss of a low.
Right.
So what I'm going to look for is a failed resistance level that tells me the sellers are anchoring in that space. What that does is minimize my risk threshold,
right,
which is what I'm very careful about trying to do that. And so the number I'm really looking at right now is 2008.75. And so I see a lot of sellers sort of camping at that region. And so if I watch it come into that level and my momentum still stays negative, I'm going to take the aggressive short in that space, and I'll have a stop that's maybe 7 or 8 ticks wide. Not even. It'll be maybe, I'll say 7 ticks wide. It'll give me a chance to get in at that top space. The reason I would take something like that is because I have slope overall that tells me I have downside momentum. I have momentum indicators that are telling me that I have downside momentum, and I'm continuing to make lower highs and lower lows. And only then will I say, you know what, I'm going to take that chart short at resistance. I will not take a chart short at resistance if I see momentum drifting to the north or I have a formation that might be telling me that I have support. Now, I could be totally wrong, but what's going to tell me I'm wrong is if I come into something like 2002, after coming into the 2008, if I back down into 2002 and all of a sudden it starts to lift, it tells me the buyers that have been sitting down there at 1989 have shoved themselves up into a higher region. They're feeling more confidence, so I'm going to cut the short off and not allow it to go against me.
Wow, great analysis, Anne-Marie. I love that breakdown on that. Let's talk about a couple individual stocks. I was actually saw you tweet out here this morning that you were watching IBM here, and I was watching it there on
Yeah,
Friday too, and it had an enormous level here at 160. It was hugging 160, all the bottom pickers coming into the market here at 160 over the last 2 months, leaning on that level. And then on Friday, we took it out, and we took it out hard. It would took out the
hard.
160 hard, and we went all the way down to 155.33, close near those lows at 155.38. We've got a little bit of a bounce with the overall S&P futures here this morning. It's trading up 60 cents, but how are you approaching this IBM after it's taken out key support?
Okay, so when we look at, I love these questions because they're very definitive. When we take a look at something that's been holding a support level for the better part of a month and a half, and then that level to the past, very, very important 160 level, this chart is sitting in the space where a lot of buyers, long-term buyers, are saying, you know what, this is consolidating, it's holding the level, I'm going to pick it up every time it comes back there, and all of a sudden it loses the level. Now what it's done is given us a measured move, because if we look at the base edge at maybe 160, at the baseline of where this IBM congestion is, and we look at the 165.50 area, which is the resistance region, we're going to see something that's about 5 points wide. Well, look at how much we pulled down, 5 points, right? So when we're sitting in that measured move, the first thing we have to look for is the people that are using the measured move to take the longs. And so they're buying it, they're taking another gamble that this is going to be the new stop for them. The problem is, if IBM sits there for that long in this dreadful space that it's been in, chances are the pop is not going to be significant. So what we're going to have to do is look at about the 157.70-ish mark to see if the sellers come in and attack that region, right? So if we're looking at the first big number is going to be that 157, and then we're going to see it again at that 157.70-ish area. So as the buyers come in, if they cannot push this up over 157 and it begins to lose support, we are going to come back down and test that low again. It's going to do the same sort of thing and collapse into the same kind of range event that it was in between 160 and 165. It's going to see another range event between that 157 to potentially 152, with that 155.50 area being that midline space. So as traders, what we have to establish is, where's the momentum? Because if we can't get on the right side of momentum, if we see it tick up in our general direction and it collapses, we really are going to have to make sure that it holds that support if we're trying to take it long. For me, again, as the person who says, I'm not going to take the break of the low because I'm very interested in minimizing my risk, I'm going to watch it up there at that 157.60 area, 157.70, and I'm going to see if it's got any collapse sitting on it from a momentum perspective. If it does, I'm going to take it short at about that 157.30-ish region, because I won't catch it at 157.70 unless I'm super lucky. So I'll get it down there at that 157.30. My thought is I'm going to get it into 156. If the weakness holds, I'm going to pull my stop right down into break even. I'm going to watch it take out the lows, and then I'm going to start reestablishing what kind of position I ought to have, whether it ought to be an add on the next pop or if I ought to diminish the size of the original position.
Now, Anne Marie, we haven't seen these lows since it looks like September of 2011. So when you say we're seeing that resistance at 155 right now, if we break through that and it continues to go lower, where do you reestablish your levels? Are you just watching where it continues to play, or are you going to go backtrack and see what it did when it hit these levels last time?
I am always going to backtrack. Always. Now, when I do look at that backtrack, I see really that 160 level as so critically important, but it's been broken a number of times before. And again, that 157-ish area really does poke its head up as the most likely space for people to try to desperately get it back up into that region. Now, here's the thing. If it loses the low, the next likely space is somewhere around 152.50. And then after that, we're looking at about 146.80. And then it puts it into, another base channel event that looks like it's got something about 143. So could it be that this chart's in a huge pattern that's going to rotate all the way over and come down into these 140 levels? Potentially. Earnings is coming up for these guys in just a little bit, and chances are not going to be good. They're not being price competitive, particularly in their services environment. And so the fact that so much services revenue makes a big difference in IBM, and they are losing a lot of bids, I don't really see things looking too pretty for them. So I estimate that if the chart can't hold these levels, that we are going to see this much further drift. It's pretty likely. But what I'm going to do in order to think for 1 minute that buyers are going to come in and hold here, I'm going to have to see a shift in momentum. And right now, I do not. Everything looks incredibly negative.
Now, Anne Marie, I know like you always have a contingency plan in place too. So if you do get this short on at 157 and stuff, it doesn't start to work out and starts to climb on you. Where is your out? Where would you like look at this trade and say, okay, look, I'm wrong and I need to, reevaluate and get out of the position? Where do you have a defined out, or how does that work?
Oh, you know what? I absolutely do. And it really, for me, that question would depend on whether I was thinking about taking IBM for a short swing or a longer term swing, right?
Okay, time
Whether
horizon.
it's a short term swing or a longer term swing. For the shorter term swing, when I'm looking to trade $5 of motion from a day, if I get up over that 157.79 today, after getting in at 157.30, I'm going to watch for a candle close, and then I'm going to see that momentum. If it's turning around on me, I'm going to get out right there with 50, 60 cents loss. I'm not exposing myself anymore, because if it gets out over that 50% level, that 157.70, it's saying to us, listen, the buyers are intent on testing the breakdown level, which is at that 160.50-ish level. That's where I'm going to look at it again. If I'm still sitting under all those moving averages, if I've come up and momentum still looks negative, I'm going to short it one more time. And that's going to give me a stop at about 161.30. So again, I've just got these 50 to 80 cent losses, but I'm always going to be trying to do it at that bounce off of resistance. It's got to completely change rotation and give me a retest of the 161 level to the upside for me to remotely consider a long at this stage. I would not pick a bottom here unless I was trading it intraday or just into the cycle that says, here's my 50% level, here's my 78% level, and so on and so forth.
Isn't what newer traders do wrong so much as they approach these trades and they look at this thing and say, look how cheap it is, look how far it's come down, it's got to come back, and they come in here and they just randomly trying to pick bottoms here on stocks that are breaking down. Isn't that like a newer trader thing? Because I know the traders that I see, that's one of the big things is like I always try to, give the opposite approach is I like to buy high, sell higher, as opposed to buy low and try to sell high. Do you agree with
Well,
that?
it's safer to buy high and sell higher because what you are doing is establishing a base where you
Mm-hmm.
can see buyers setting themselves into a region that will cushion you, right?
Mm-hmm. Mm-hmm.
And so here's the problem. When we try to buy on a low and pick a bottom, it's that part of our psyche that is generally optimistic. I believe that most humans are wired to be optimistic so we can overcome um, discouragements that we see in our lives, right? So we're sort of naturally geared to be a little bit optimistic. And so we say, this is IBM, it's going to hold. For me, all I do is look at the probability of events based on formation and location. And so I, I do not think about whether it is I'm picking a bottom. I am thinking about where is it that buyers might show up and where is it that sellers might show up. And if I take a bet here, what's the absolute most that I can lose and is that viable? And when I look at things like that, I've got to have lots of corroborating evidence. So, like for this measured move, as it drops over and down, I would not take a low at the loss of this 155.38 level, the close of the prior date. I just wouldn't do it. Now, there's some people that might do that, and it would work out delightfully well. They'd get buck 50, whatever it is. That's not in my wheelhouse. My wheelhouse is to watch the buyer step in, see how much power they have to push it up into that line of resistance, and that first line of resistance, because I'm already sitting in negative momentum, it tells me that the highest probability is going to be a collapse at that number rather than a hold of that number. So I'm constantly trading the probabilities based on the overall movement. It's sort of like making sure that I'm sitting on the right side of the tide.
Anne-Marie, as always, not only do you see the markets crystal clear, but the way that you can communicate them is definitely a gift. Thanks for coming on today. This was awesome
Oh, I'm
stuff.
so grateful.
All right, Anne-Marie, that is Anne-Marie Baiynd. Again, check out her book. It really is amazing, her technical analysis and what she does. And also check her out on Twitter at Anne-Marie Trades.